want to talk a bit about the small business financial services and why I believe it's at a point of inflection, and why in particular so many of us have been attracted to BFS, and what the importance of data is in all of this. So number one, we are seeing a transformative impact of a new generation of entrepreneurs growing up and becoming influential in demanding new kinds of products, new transparency, new ways of being served. This is not your father's kind of SME lending space anymore. This is about mobile first, anytime, anywhere, on your terms products where the decisioning is done in seconds, not in days. This is the pull, if you want, that's happening in this market. Now the good news is that we are seeing an increase in the availability of data, an increase in the capability around data science, great competencies in user experience design, and in particular I think one of the theses that we have is that a lot of what we've seen in consumer financial services is now starting to move its way into small business lending. And that will transform the entire kind of user experience, if you want, for customers. However, this is not lost on the very big companies around the world. Amazon, Shopify, Square, PayPal, Stripe, everybody is running to this space. And in many respects, these companies have an unfair competitive advantage because they have got a massive customer base and proprietary data on those customers. And the question is, how do you compete in a world where you have, you know, Amazon doing lending? And in particular, Amazon doing lending in partnership with Goldman Sachs. We believe actually that the combination of these three things has created a tipping point that has shaken things up materially, and it's actually creating opportunity for a new generation of company. Now, is it compelling? Sure. It's about $1 trillion a year marketplace, 600 million alone within the United States. What's interesting about this, though, is most small businesses are seeking less than $100,000, and most small businesses are chronically underserved. So to me, this is still very much of an untapped market. And it's part of a broader theme that we see around the world of the underserved, where roughly 2.5 billion people remain financially underserved. Data is unlocking the ability to serve these communities. Data, automation, AI, mobile is changing everything. And over the next 5 years, I think we're going to see the rest of the iceberg appear around what has already been worked on very hard over the last probably 5 years in the rest of the world. So, fast-growing middle class in emerging markets, a disenfranchised kind of millennial class that doesn't want to, you know, accept the banking products of the past, and about 700 million aspirational near-prime customers around the world. This is an enormous marketplace. Investors are noticing, obviously. We are seeing about, I can't remember the number, significant billions of dollars of investment even in Canada over the last 5 years. I think Canada had one of the largest investments in this sector in the last 24 months that it's ever seen. But there are 67 fintech unicorns around the world with about $244 billion of notional market cap. This is not trivial. Now, what do these companies have in common? Well, one of the most interesting things they have in common is the importance of data science in driving a disruptive user experience. If you look at almost all of the big fintechs around the world, they are fundamentally modern, data-driven companies. So what's happening and why does data science change everything? Well, number one, we are starting to see an increased availability of data. Not necessarily just the traditional data that we've always used for lending, like credit bureau information and so on, or not even bank transactional data and the other things that are now starting to show up in real time. We're starting to see macroeconomic data. We're starting to see much more detailed data on the operational back office kind of foundations of companies, looking into their supply chains, looking into their accounting systems, looking deeply into kind of what's called exhaust data by a number of you data scientists. All of that, as we start to improve the cost of ingesting and leveraging it, all of that is going to transform underwriting. And I often have conversations with people in the small business lending space who say to me there will always be a role for a human underwriter. And that very well may be the case. But I can tell you that more and more of our decisions are now becoming algorithmic. And as more and more data becomes available, we are starting to see more and more automation in that. And it's just a matter of time until really it will become almost a fully algorithmic exercise. So what is this implying? Well, this kind of wider aperture automated underwriting is allowing for some transformative user experiences, right? Being able to underwrite a loan in 10 minutes. being able to continuously underwrite so that you can adjust the available credit in real time for a company, both up and down. This is not a case where you get underwritten historically for a loan and then have to come back in 6 months and maybe ask for another one. Right? This is a world where we're unlocking literally real-time and adaptive credit. And hopefully, our objective is to try and unlock that credit earlier in the life cycle of companies so that we can provide capital to companies at an earlier stage of their existence, but then follow them and very quickly grow with them as their capabilities rise and as their capital needs rise. So, new markets, absolutely. Earlier access to capital, definitely a North Star for some of the stuff that we're working on. Now, this is not trivial. There are risks certainly that we monitor as a company and we think about pretty deeply. One of them is obviously data risk, and the data risk is kind of a broad definition, but it means that you've got to be really careful about the data you are using to drive your fundamental underwriting decisions. We're making significant risk decisions every time we issue a loan, right? BFS will originate $300 million a year in loans. We just don't do that on the back of a napkin. So the question is, what is the data? Is it sustainable? Is it legally safe to access, right? Is it accurate, and so on? And I think the data risks are going to be front and center for us over the next little while. Model risk is also important. We've over the last 7 years, I've watched some fascinating models being built, some speciously and for fun. So for example, last company, we ran some silly experiments. We said, does your Facebook profile sort of correlate to lending outcomes? And I'm not talking about the textual and social stuff that you're doing, your social graph and what you say and do you party like a rock star and did you lose the last 2 days because you went on a bender. I'm not talking about that. We just started with a very simple test, which was your Facebook profile picture predictive? And we took one very simple thing. We said, do you wear glasses or do you not wear glasses in your profile picture? And do you wear dark glasses or do you not wear dark glasses in your profile picture? And unfortunately for us, it turns out that it was somewhat predictive. If you wear no glasses, you do relatively well. If you wear glasses, you do better. If you wear dark glasses, you do worse. Now, how on earth can we use that data? We can't really use that data in lending, right? So this notion of all of this wonderful data available to us, and yet some really serious guardrails around what we use and how we use it, I think is going to be absolutely core to how we all evolve over the next little while. There's build risk. A lot of the tools that we're using are still very, very young. They're evolving very quickly. And there's massive human capital risk. Okay? The data scientists in this room are under siege. If you do not think that they are getting multiple job offers every quarter, you are naive. And those job offers are for substantial amounts of money. The data scientists in our company are amongst the best paid of our entire team. And there's a reason for that. There are very few of you relative to the demand. So if you are a data scientist, congratulations, this is your time. Now, there's also significant regulatory risk here. I don't think that regulators have yet got their head wrapped around what we are looking at and potentially how to provide safe guardrails for it. So let's spend a couple of minutes just talking about regulation, because I think it's quite important. So regulators serve a really important purpose, right? In the financial system, they provide stability, critical stability for the markets. They are absolutely critical in kind of creating this inherent intellectual and emotional defensibility. We've got to believe in the sanctity of our financial systems, or else we get into trouble, right? So we understand that that is critical. However, they also have a consumer protection requirement. And this is where we start to see some challenges around data. When we are on Facebook and when we are posting pictures and talking about our adventures, do we implicitly give anyone permission to use that to score us and to make decisions on the credit that we may not apply for or be eligible for? We don't. Right? And the ability to access all of this data, remember there's a story of the last few weeks of this company that's been vacuuming billions of Facebook profile pictures and LinkedIn pictures and so on, identifying those people and selling that back to law enforcement. Right? This is starting to create real pressures on these social data sets. And so it's really important that we kind of get this right. The problem is that all of us as businesses face a pretty wide range of regulatory standards, right? And multiple overlapping regulatory bodies. They're often confusing jurisdictional overlaps. Why does this matter? Well, it's not only a risk to the business, it matters in the fact that we need to take a leadership role with regulators. You cannot just hope that this is all going to turn out right. We believe firmly that you need to engage early and you need to engage often. So there's a couple of ways that we're working with regulators. Number one, we're trying to help them understand why doing this proactively creates a significant opportunity for innovation, right? We are working to sort of understand the impact of us being able to use alternate data on widening the aperture of our lending. Can we unlock capital to companies earlier in their life cycle by using this data? That is a powerful economic advantage, and it's important that government and regulators understand that economic advantage, right? So there is an ROI on all of this. However, you don't get there just assuming that regulators are going to figure it out for themselves. I think it's really important that you start with an open and engaged dialogue with regulators now. You walk them through very transparently what your aspirations are, what you're doing and how you're doing it and why you're doing it. Because they need to be educated in the kind of ROI balance, right? The risk-reward trade-off balance. And the problem that we have, of course, is that regulation and legislation are inherently politically motivated and politically influenced. And if you have an uneducated legislator, right, who's coming into an election, who is going to lose an election for hating a bank, right? And so if we don't play a proactive role in being both good actors but helping these organizations understand how best to evolve, I think we're all at risk, significant risk. And I think you delay this at your peril. If you're not actively engaged with regulators right now and looking ahead of the curve with them and explaining to them how, or even asking them, their input on how, we're using data and how we expect to use data, I think it's at your peril. So I want to spend the last few minutes just covering some ground around a number of interesting companies using data, not only in lending but in financial services, whether it be obliquely or directly. Many of these companies, interestingly enough, come from rest of world. Why is that? Well, in some respects, necessity is the mother of invention, right? So if you're going to be lending in sub-Saharan Africa, you don't have, a nice Equifax credit bureau with lots of years of data. You just don't. You barely have a banking infrastructure with historical data in it. Really, you have to judge people on the basis of alternate data. So the competencies that are being built in this area, because necessity is the mother of invention, are tending to be built in rest of world, not here. So South America, there's a massive rise in financial services innovation. Africa is, the second or third fastest growing market, and probably the second most valuable banking marketplace in the world in terms of the potential. Okay, these are significant forces. So let's talk about some of these companies and what they're doing and why we think it's just interesting and important. So Tala is a company based in Silicon Valley, but focuses exclusively on Africa. Tala's entire business model is driven by lending small amounts of money to both consumers and I think increasingly now to young entrepreneurs. The entirety of the risk decision is automated, and the entirety of the risk decision is driven completely by what is on your phone. Nothing else. Now, do not underestimate what is on your phone. Our entire lives are on our phone. The apps we use, our social graph, right? Where we spend our time. In some cases, access to things like browsing history. All of that is on your phone. And you need to be very, very careful when you give apps permission to interact with the core content of your phone. Because this data, it turns out, is not only predictive, but it also carries some risk. In Tala's case, they're using it for good. And because the mobile is so much the center of the financial life for people in Africa, they're able to do this extremely effectively. Now, WeLab is doing this at a much bigger scale. So WeLab scrapes a significant amount of telco and social data in order to understand who you are as a person and judge your scoreability, right, your lendability. They have raised $581 million. They're very, very smart investors behind these companies. Talla's raised $130 million, I think, right? So this is both a reflection of the potential upside of these businesses, but these are both alternate data-driven businesses. So there is clearly a really interesting opportunity for data in this space. The Brex of Africa is a company called Tribal Credit. They use a bunch of really interesting technologies to score emerging small businesses in Africa, but they also use blockchain and other technologies to enable payments where you have cross-border payments infrastructures that are less mature. Tribal is much younger as a company, also I think based in the Valley, but focused very much on emerging markets. Beyond lending, we are seeing some interesting other data uses and data sources, including the gamification of life insurance, car insurance, and so on. So Avibra is an interesting company in the sense that your ability to bring down the cost of your life insurance is driven by your behavior. So if you record workouts, right, and you show that you are focusing on physical fitness and nutrition and so on, you actually unlock life insurance at a lower cost. This is early days, but you can imagine similar paradigms in lending. Krabi, and I love the name of this company, is a very young emerging insurance player in Mexico. And you basically start with Krabi by downloading the Krabi app, and then you give Krabi access to all of your location information, speed information, everything. And based on that, you get a score as a driver, and you get the appropriate level of insurance. Now, I'm sure that driving in Mexico City is no fun, and I'm sure that it's a very high-risk venture. It's a lot like driving in South Florida. But the question here is, you know, they're good drivers and they're bad drivers, and if the insurance company has near real-time access, or at least reasonable access to your driving behavior and your driving habits, why shouldn't you be rewarded for it? Much younger company. They're analogs, as you know, across North America for this already. But again, this is a trade for data. You are giving up your data to get something back in return. Okay, really interesting company. Now, let's talk about big data. For some time now, hedge funds and others have had access to significant amounts of data. Sometimes it's called exhaust data, right? There's many different kind of components of the data stream. Satellite imagery, ship tracking, jet tracking, supply chain estimates based on container flows in ports. So the guys at Orbital Insight are pulling all of this together, including real-time satellite imagery, and providing that information to many types of companies, but amongst them, significant financial services investors. Now, today, those companies typically are seeking alpha, and therefore they're looking, it lands first in the investment space, right? The serious hedge fund space. But if we are lending, macroeconomic trends are important, right? And if we can glean macroeconomic trends from data like this, we should be ingesting it in real time. So I think you're going to see kind of a movement from sort of a seeking alpha to seeking genie, if I can sort of coin a phrase, right? And I think that more and more of this data is going to be made available to us. Certainly at BFS, we are starting very simply with real-time bank transactional data, real-time social data, cloud accounting data, and credit bureau data, right? Real-time, 7/24, 365. In our new products, if you want one of our products and you want to be able to unlock capital earlier and you want that capital to grow in real time as you improve as a business, you give us real-time 7/24, 365 access to all of that information. Now, by the way, in return, we give you some great benefits, right? We'll alert you with low cash balance situations. We'll give you an alert if someone says something bad about your social score. We give you, there's a trade here of value. But do not underestimate the importance of 7/24, 365 data. We are going to be all over that. That's wave number one. Wave number two, and the challenge to Gene and the rest of the team is, how do we look at more broad-based data, macroeconomic data, or even microeconomic data, or company-specific data, to be able to make bigger lending decisions algorithmically. This stuff is key. Now, right here in Toronto, there's a very interesting company called Quandl that's now, I believe, owned by NASDAQ. Quandl is a data aggregator. Quandl aggregates all kinds of interesting information, and again, most of it's used by the investment community. There's some great stories from Quandl about how that data has been used. So, for example, I think it's 2017, Johnson & Johnson was in the midst of an acquisition of a company. That company was based near Basel, Switzerland, perhaps. And the hedge fund guys were tracking the Johnson & Johnson corporate jet. And they noticed that it was spending an awful lot of time at this particular airport. So they mapped who works and lives around that airport, and they discovered definitely there was a company or two here that would be in their sights. And it turns out the good part of it was they were already investors in that company, so they were able to kind of understand the potential impact for an exit and double down on it. That stuff is happening all around us, right, today. It's not happening in the lending business, though, today. It's happening in the investment business, the hedge fund business. Why isn't it happening in the lending business, right? Why aren't we using this information to have insights into not only micro trends, but broad macro trends? And so I think that's one of the really interesting questions that we're asking ourselves as we evolve our strategy at BFS. And as we move to a world where we widen the aperture of data that we consume and we increase the power of the algorithms that we use on that data. And we think that doing that right will have a transformational impact on our valuation as a company, which is ultimately what we're here for as a VC-backed company. So I'm a Canadian who's lived in Berlin for the last couple of years. I'm now living in South Florida, back to Toronto for the snow because I miss it. But I have to use a great Canadian quote, and I think this is a particularly appropriate quote. Good hockey player plays where the puck is. A great hockey player plays where the puck is going to be. That is our job as leaders, data scientists, and underwriters, and so on, is to try and figure out the arc and be well up that arc ahead of anybody else. And that, hopefully, is that.